Hey, what's up? It's Jamaal Dickerson, your favorite realtor, and I'm coming to you today to talk about buying your first home in 2024. Now, I know the process can be a bit of a maze, but don't worry, I got you. We're going to break it down together. So let's dive into the best mortgages for first-time home buyers. All right, let's get into it. So you're thinking about buying your first home. Congratulations, that's a big step. Now you're probably asking yourself, what's the best mortgage for me? That's a great question. Today we'll be tackling two main points. What's the easiest loan to qualify for, and which loans set you up for long-term success? Sounds good? Then let's go. First thing first, let's talk about what you need to focus on when you're buying a home. Think of yourself as the CEO of your life, and you need to make some big financial decisions. You got three main things to worry about: your loan balance, your interest rate, and your PMI. That's your mortgage insurance. Now, your mortgage payment is like a pizza with 5 slices. You got your principal, your interest, your taxes, your home insurance, and your PMI. Trust me, we're going to make this pizza taste a whole lot better by the end of this video. Alright, let's break down the types of loans. You've got your government-backed loans like FHA, VA, and USDA, and you got your conventional loans. Now, think of FHA loans as your friendly neighborhood loan. It's easy to qualify for, especially if your credit score isn't shining bright like a diamond. But here's the catch: higher and permanent mortgage insurance. On the flip side, we have conventional loans. These are a bit more like the cool kid in school. It's flexible, and if you got a higher credit score, you might score some sweet deals with lower PMI and a chance to ditch that insurance once you hit 20% equity. Sounds good, right? Now, if you're sitting there thinking, Jamaal, what about a down payment assistance? I got you. These programs help with the upfront cash, but remember, they come with extra rules. But hey, if you're a first-time buyer, every little bit helps, right? So which loan is easier to qualify for? Drum roll, please. FHA. Yep, FHA takes the cake for being the most accessible, especially if you're just starting out or rebuilding your credit. But listen, if you got your financial ducks in a row, a conventional loan might be the way to go for long-term success. Lower PMI, potential to get rid of that PMI, and usually better interest rates if your credit score is on point. It's all about setting yourself up for success down the road. Now let's talk about the details of these loans. FHA loans are backed by the government, which means lenders are more likely to offer you a loan even if your credit score isn't perfect. You only need a 580 credit score to qualify for the 3.5% down payment option. But keep in mind, you'll be paying for mortgage insurance for the life of the loan unless you refinance to a conventional loan later on. On the other hand, conventional loans are not insured by the government. These loans often require a higher credit score, usually around 620 or higher, and a down payment between 3 to 5%. The big win with this is conventional loans, once you hit that 20% equity mark, you can cancel that PMI. And that's a huge when it comes to saving money. Now let's dive into the pros and cons of each type of loan. For FHA loans, the pros are pretty straightforward. Easier to qualify, lower down payment, and they can help you get into a home fast. But the cons include lifetime mortgage insurance and potentially higher interest rates. For conventional loans, the pros are lower PMI costs, the potential to cancel PMI, and often lower interest rates if you have a good credit score. The cons, higher credit score requirements, and usually a larger down payment up front. All right, let's talk about some real life scenarios. Imagine you're a first-time home buyer with a credit score of 600 and not a lot of savings. An FHA loan could be your best friend because you can qualify with that score and only need a small down payment. But you're going to have the mortgage insurance for the long haul unless you refinance. Now, let's say you've been working hard on your credit and you got it up to a 700. You've also managed to save up a bit more for a down payment. A conventional loan could be a better fit. Sure, the upfront cost might be a little higher, but you'll save far more money in the long run with lower PMI and the ability to cancel it once you hit that 20% equity mark. Remember, it's all about what's best for your situation. There's no one-size-fits-all answer here. The key is to weigh the pros and cons based on where you are financially and what your long-term goals are. And don't sleep on down payment assistance programs. Many states offer these programs to help first-time home buyers get into a home with less cash up front. These programs can come with additional requirements, but they're definitely worth looking into if you're struggling with coming up with the money for the down payment. Now, let's not forget about the VA and USDA loans for those who qualify. VA loans are a fantastic option for veterans and active duty military members. No down payment and no PMI. USDA loans are great if you're buying in a rural area with low interest rates and no down payment. Now, you might be wondering, how do I know which loan I can qualify for? The best way is to get pre-approved. This involves submitting some financial documents to a lender so they can see where you stand. They'll check your credit score, income, and other factors to determine how much house you can afford. Getting pre-approved not only gives you a clear picture of your budget, but it also shows sellers that you're a serious buyer. And trust me, in a competitive market, that's a big deal. All right, so I hope this breakdown helped you feel more confident about your mortgage options. Remember, buying your first home is a journey, and you don't have to do it alone. If you need more personalized advice, then let's connect. I'm here to help you make the best choice for your future.